Trading stocks, options on stocks, futures, options on futures, and retail off exchange foreign currency transactions, Forex, involves substantial risk of loss and is not suitable for all investors. Past performance, whether actual or indicated by historical tests of strategies, is no guarantee of future performance or success. There is a possibility that you may sustain a loss equal to or greater than your entire investment, regardless of which asset class you trade, equities, options, futures, or Forex. Therefore, you should not invest or risk money that you cannot afford to lose. Trade Guide Limited is an authorized representative of Forex Max Limited and regulated by the Financial Conduct Authority number 229906.
G'day folks, this is Danny Younes from SuperchargeWyckoffVSA.com. I'm the author of Supercharge Your Trading and Investment Account using Wyckoff Volume Spread Analysis. In this video today, what I'm going to go through is how you can identify when there is buying in the market, when the professional money are buying. Now, we see here we've got the Aussie USD currency pair. Now this applies to any instrument. It could be stocks, it could be futures, Forex, bonds, options, whatever. All right, the principles are the same. We saw the Aussie rally yesterday on the back of the Federal Reserve's meeting. Now, I haven't read into it fully yet, but we can see clearly that there was a stronger Aussie dollar, there was a weaker US dollar across the board. Okay, now as you can see here, the Aussie dollar rallied. Okay, so we had ultra high volume. Now, when we speak about ultra high volume on up bars, we normally say that that is weakness. All right, and we did get a VSA principle. Okay, and we got a sign of weakness 26, supply coming in. But if you have a look, the next bar was an up bar. So a up bar is a bar that closes higher than the close of the previous bar. And that bar also had ultra high volume. Okay, so there was certainly buying there. Okay, so we see that price doesn't continue going up because what the smart money want to do, what the professional traders want to do, is they want to test to see if there's any sellers in the market, all right, before they continue the price up. And the absolute advantage of the VSA plugin is that it shows you where there is an imbalance of supply and demand, all right, and it gives you principles to look out for to take trades. Okay, so in this case here, we saw a widespread up bar, closed on the highs, next bar was up. So let me just zoom in here so it's clear. All right, the next bar was up. All right, it closed in the middle of the range. All right, and it was on ultra high volume. We saw the following bar was also a up bar, and we did get a VSA principle, a sign of weakness 145, no demand. Okay, but if you have a look at the volume, we can see that the volume was low. But the next bar after that was a smaller spread bar and even lower volume. So there was no demand. So there's no demand at that point in time to drive the price up. Okay, and that was a confirmed principle here. We saw the next bar was down. But the most important bar was this bar here. Okay, with this bar here is a test-like bar. Okay, so the bar opens up, they drive the price down, they're testing to see if there's sellers. All right, the bar closes on the highs. All right, so certainly here there are no sellers in the market. All right, that's why this is a test, a sign of strength 11, basic test. Okay, so they test the market. Are there any sellers? Are there any sellers? There's no sellers. all right, at this point of time. We wait for confirmation, all right? The next bar is up, all right? It's an up bar. And that confirms that there is no sellers. Okay, so we've got this strength behind us. We've had two up bars, all right, an ultra high volume, okay, and we've seen on this bar that they push the price higher, so there's certainly there is buying, but they don't continue the price going up. They let the price retrace, okay, and they mark the price down, testing to see, are there sellers in the market? Are there any sellers? And that's why you normally get these kinds of principles back into areas where there are ultra high volume. Okay, so we can see here these two bars here have ultra high volume, and when they test areas of ultra high volume, and that's what we got, a basic test, sign of strength 11. All right, and that pushed the price up. Okay, so there were certainly buyers here. Okay, now some traders would have thought, this bar, look at this, they've driven the price up. It's closed towards the middle to lows. That is a weak bar. Okay, so they're probably starting to think, okay, we're probably starting to see sellers, entering the market. Okay, and when the volume here had dried up, they're probably saying, okay, yes, the volume's dried up. Looks like the sellers are coming in, but the sellers didn't come in. There were still buyers. They were testing. The test was a confirmed test, which drove the price higher. Now, at these highs here, we do see that there is no demand. Okay, no demand. So now, what we're starting to see is a retracement in price. Now, this level here is critical, okay, either on this high or on this high. All right, it's very critical because these are ultra high volume areas. Now, if we may see a test here around this level, or back into this area here, a test, or a no supply, and if we do get those principles appearing, okay, as the price is falling, then that is clearly buying. That is absorption volume. Okay, so they're buying. So let's see what happens here now. If we do get some testing or no supply, that is strength. So we will be looking to go long. Okay, so at this stage, we haven't had any confirmed sign of strength, and we can see that it is falling. So this is certainly here. This is certainly profit taking. The professional money now are basically, setting themselves up. They are positioning themselves, all right, if we get a confirmed test or a confirmed no supply, then we can look to take long trades. Okay, so at this stage, we're sitting on our hands and waiting to see what is going to happen. But that's how you identify when there is buying in the market. Okay, so this here was news. All right, we don't trade when there is news. We wait and we see if there is going to be tests, and we do get those tests, and the price pushes higher. Now that is the advantage of volume spread analysis and the trade guide software tools. We can clearly see when there is a imbalance of supply and demand in the market, and we can take advantage of it, and take winning trades. Okay, so clearly testing or no supply in a rising market are high probability trades when we have trend alignment. Okay, and we need to have trend alignment amongst multiple time frames. Now at this stage, we don't have a trend alignment. We've got the smaller time frames trending down, the bigger time frames trending up. So if we want to start seeing a change in behavior now, this is where it's going to start, building a course to go higher, and we'll start seeing the smaller time frames starting to trend up. Okay, so at this stage, we're not looking at taking a trade. We're waiting. We want some trend alignment, because once you have trend alignment, that means you'll have a higher probability setup. All right, once we get trend alignment and we start seeing signs of strength, then we'll head back up towards the highs that we reached of around about 80.60. Okay, folks, I hope that all makes sense to you guys. If you got any questions, send me through an email to info@superchargedwyckoffvsa.com. Have an excellent trading day, folks, and I'll see you in a future video. Bye for now.